Hello and welcome to BloombergQuint. JSW Steel more or less has reported inline set of operational performance for the December quarter. Of course, we've seen a bit of elevated cost pressures weighing on the operational performance, but to further slice and dice the number, we've been joined by Joint Managing Director of the company, Mr. Seshagiri. Hello and welcome, sir. Pleased to have you as always. I'm going to start off by asking you about your standalone EBITDA performance because that's the number that's taken a bit of hit when it comes to sequential growth that we've seen. What can be expected going forward, given the kind of cost pressures that the industry is witnessing right now?
No, EBITDA per ton is very difficult to say this will be maintained or this will go down or going up, because the prices are volatile and the input prices are really volatile, particularly coking coal, which used to be $310 in the last month, and now we are seeing over $430 per ton. So that is the kind of increase which we are seeing in the coking coal prices. Even iron ore, which used to be $85, today it is $130. So what we are focusing is how to increase the volume and value-added products the way we have done in the last quarter. So our value-added products were 62% when compared to the Q2 60%. So the Dolvi expansion is more or less stabilized. So we'll be able to get good volumes from Dolvi. So with the growth in volumes, I think we should be able to maintain whatever EBITDA we have given in this quarter, even in the next quarter. But the EBITDA per ton is anybody's guess, the current environment where it is so volatile.
So when you say you expect to maintain the same EBITDA, are you talking about just the Indian operations or you're talking on consolidated basis? Because standalone EBITDA numbers stood at around 6,700 crore.
Either you take standalone or consolidated, we will be able to maintain same amount of absolute amount of EBITDA in the group. That is how we are seeing the current picture.
Okay. Also, I wanted to understand a bit on your full year sales target that you have, maintained. Are you expecting to maintain the same kind of growth? I think the number is around 4.6 on consolidated basis when it comes to this quarter. What kind of growth can be expected sequentially? And also, is there any kind of recalibration of the sales target?
We have given a sales target of 17.4 million tons in this year. That consists of 16 million tons from existing operations and 1.4 million tons from our Dolvi expansion. If I see just 16 million tons, we are very, very close to our guidance. So we'll be close 98% achievement as regards to sales. But if I see the expansion, it got delayed. We were supposed to start in the month of July 2021. But it got delayed and we started only in November 21, and ramp up took some time. Actually, we have only 1 quarter to get more production or volume from Dolvi expansion. So therefore, we have lost almost close to 1 million tons on the overall guidance which we have given. So 17.4 which we have given, we will be able to achieve around 94-95%, considering what we have done up to 9 months.
Sure. A percent of your exports, it's also got to do with the fact that exports number have also been moderating, right? From 30%, the number came down to 15%. Of course, sure, it was in line with the guidance that you've given in the previous quarter where you said that exports are going to be moderating. But now with the situation being a little, maybe, do you think that exports volume can pick up going forward in Q4 because of the ongoing maintenance activities in mills that we've been seeing in East?
The way you have to look at the Q3 versus Q2, Q3 numbers again, we crossed domestic sales over 3 million tons. 3.1 million tons were our domestic sales out of the total quantity of 3.91 million tons we sold in the consolidated company without BPSL. So the growth in domestic sale volume was 31% on quarter-on-quarter basis. So because domestic demand has picked up in the Q3 over Q2, we have moderated exports. It is not that we have deliberately reduced the exports. Because in line with the pickup in the domestic demand that has happened, if you see the steel consumption numbers that have been announced by JPC, October, November, December, month on month it is going up. If I see the December number, the consumption was 9.29 million tons, which is the highest ever consumption starting from April 21. In the 9 months, December month was the highest. So if I look at 9.3 million tons of consumption, that translates to 109 million tons on an annualized basis. So there is a very good growth in regards to consumption in the domestic market. So in line with that, the exports got moderated in the last quarter.
With that kind of rationale that you've just provided, can we assume that the numbers will further moderate down because of the increasing domestic demand even in Q4, which is otherwise a seasonally strong quarter?
What is also important to know is that Q3 versus Q3, year-on-year basis, if I look at it, the steel consumption has fallen by 7% in the Q3. That means the acceleration in demand is not as strong as we have seen in the FY21 versus FY22. But our expectation is Q4 will pick up. The December month we had seen 9.3 million ton of consumption. So if the acceleration in the overall domestic demand in the Q4 is strong in the domestic market, then our exports will continue to get moderated. Otherwise, again, we will export more.
Okay. So net, you do see some amount of incremental volumes coming in from export, like a shadow of doubt maybe that the export volumes would be higher in this quarter is what you're saying, right?
Yes.
At this point of time, what is the difference between the export and the domestic realization, and which of it I'm assuming domestic realization will still be higher as compared to the exports?
It is more or less similar as on date. There's not much difference. Earlier, exports used to be at a premium, but now export markets, there is correction which we have seen. At the same time, earlier the domestic steel prices used to be at a discount. So when the international prices got corrected to the same extent, domestic prices have not fallen, so the discount was there. Actually, today it is more or less same. If you look at landed cost of imports versus domestic prices versus export realizations, I don't think there is a very huge difference in that, particularly imports from China, not from FTA countries.
In terms of dollar per ton, 50, 100, what is the figure that we're looking at?
Sorry?
In terms of the difference, $50 per ton or $100 per ton, what is the kind of difference still between the two?
Domestic prices versus landed cost of imports from China, if I look at it, still the landed cost of import is a premium from China. Okay, it is at least 3 to 4% premium compared to the domestic price. But if I look at from FTA countries, the same domestic prices, the import duty is zero in the case of FTA countries. It is more or less similar, or domestic prices slightly higher than the imports from the FTA countries.
Fair point. What prices are auto contracts presently being negotiated at, and how was the scenario in this quarter?
We have already settled the auto contracts, so the increase in price got reflected in the last quarter. So that will continue in this quarter.
So there is incrementally no price hikes coming in per se for this quarter, but if you started negotiating for the next new financial year, what is the kind of increment one can look at, or for that matter, discounts, if any?
No, there is already a formula that whatever prices average that will come in, let us say from October 21 to March 22, that could be the price for the next 6 months.
A word on the input cost pressures. A lot has been written and said for the input cost pressure, especially when it comes to coking coal cost, because you've been in the press release also, it's been pretty much there that the coking coal cost escalation basically has weighed on the operational performance. But, BHP bulletin has reduced the coking coal production now, the targets that it had for the second half of the financial year, that has come down. Do you think any kind of further pressure building up, or it is just in anticipation of reduced demand? How do you look at it?
No, the way I look at it is China used to export, if I look at 2019 numbers, they used to import around 75 million coal. Now they have reduced their dependency on the imports. If I see the same number in the year 2021, it has come down as low as 50 million tons. That means 25 million tons of coking coal, which China used to import, is not there. And at the same time, the Mongolia, which used to produce in the year 2019, for instance, they produced 36 million tons. 2021, they produced only 16 million tons. That means 20 million ton lower production from Mongolia. Even if I take out Australia, BHP Billiton has moderated as far as their guidance is concerned. Mongolia is increasing their production because COVID is coming under control. Chinese dependency on the imports either from US or Canada or Australia is coming down. Therefore, if I look at little medium-term outlook for coking coal, overall demand from China, overall their imports from the rest of the world is coming down. So with that, even assuming in the rest of the world, the production goes up and the more demand for coking coal comes in, and some moderation in Australia, I don't think it will have an impact as far as the overall dynamics are concerned. So that's why the current spurt in coking coal price is completely, in my view, speculative. So just a news item which is coming in saying that there is some moderation in their outlook. The coking coal prices going up by $50 to $30 a day has no meaning. And even though the physical transactions are not happening, the index is getting built based on bids and the offers that are there on the exchange. So it is not really reflective of the actual prices or actual trades that would happen. If I see last year, 2021 entire year, total coking coal that has been traded in these exchanges altogether is hardly any amount. 22 million ton is total. Out of that, 67% is the coking coal. Whereas total trade in coking coal is, total seaborne trade is 300 million tons. So what we are seeing is mostly...
Mr. Rao, do you see easing of coking coal prices for the March quarter as compared to the December quarter? If that's a yes, what's the percent that we're looking at?
No, in the current quarter, because of the weather conditions, because of the guidance which BHP has given, there could be some pressure on the coking coal prices. But I don't expect that will continue. It is a matter of just few weeks or maximum up to 31st March. After that, I expect coking coal prices should correct downwards. And at the same time, we have been working with the government to see how India can really become self-sufficient in terms of coking coal without relying upon imports. So we have large coking coal mines in India. We will be able to develop our own coking coal mines as a country and meet the requirements of the steel industry.
Yeah, that's pretty much a long-term plan that you're looking at, right? Maybe we'll just plant a seed, sure. But at this point of time, you would see some kind of hardening happening till the time the cost pressures kind of ease off. If that is the case, very a conservative scenario, what's the percent of increase one could look at?
As I mentioned to you already the numbers, as far as China is concerned, their imports are expected to fall. Mongolia is expected to increase their production. So therefore, already we are seeing cargoes of coking coal from Canada and US is moving around for buyers. That is the kind of scenario, whereas Australia, because of the weather conditions, there are some issues as far as supplies from Australia is concerned. So there is temporary mismatches which can come in this quarter. So it is a matter of one quarter as regards to the very high coking coal prices. But I don't see these prices to continue longer. It is not affordable.
Okay. So you wouldn't want to put a specific number to the cost escalation per ton for coking coal prices given the scenario presently?
From 1st of January to 21st of January, the prices went up by $110 per ton. How I can give you a number today saying coking coal impact will be so much? It is very difficult to say. Every day prices are going up. At least we have to watch for next 20 days.
Okay. A word on domestic iron ore prices, which have moderated with the global indices. Do you think some amount of relief coming in on that front?
International prices, as you know, moderated to a large extent from its peak, from $230 or $235 per ton. We have seen 85. Now it is at a level of $130 per ton. But the domestic iron ore prices have not corrected to that extent. NMDC has reduced the prices to some extent. But unfortunately, the IBM prices that are getting fixed in the state of Orissa, they are not coming down. So that is where I think we are also contesting the way the average selling price published by IBM is getting worked out. That is not reflecting the actual prices that are prevailing in the market.
Okay. Electrode prices also are seeing some amount of uptick because we've been reading commentaries from GrafTech and also HEG and Graphite to an extent. They've been saying loud and clear there has been a substantial increase, and this is the kind of direction that we're looking at for electrode prices. What were the prices in Q3 and what can be expected going forward? At least, in Jan, what was the trend looking like?
So ferroalloys, we are seeing some downward correction, which is happening. But in the case of zinc, aluminum, and also electrodes, we are not seeing a similar trend yet. So we expect the downward revision of these prices because of one reason. The reason is Chinese power crisis, which used to be there, that made the entire supply chain choked. All these prices went up. But now that is getting a bit easing, we are seeing in China. So the way ferroalloy prices have fallen, in a similar manner, we expect even other inputs for steel making will come down due to the Chinese easing of their power sector and their manufacturing again coming back.
Okay, so no escalated pressure per se for electrodes at least. Talk about Indian HRC prices because they have been falling. There have been incremental reports saying that finally there is some amount of policy support which is coming from China, loan price rate cut for the first time. What is this? And how do you read this? And when do you see the trend reversal to take place for the industry as a whole?
Prices now are stable. I am not seeing a fall in the steel prices, particularly after the coking coal prices surged over $100 per ton in the last few days. So that made the steel prices to stabilize. Over and above that, everybody's expectation is Chinese stimulus in whatever manner it is, either reduction in interest rates or more liquidity or more credit. So there will be some stimulus which will happen after the lunar holidays for them, and also after the Winter Olympics. Thereafter, things should come back to normalcy in China. Already we are seeing an increase in the overall economic activity, particularly the steel production in China, relative to what it was in the month of November. December, there was an increase in production. January, the same trend is continuing in China. So overall thing, if I look at it, the steel price downward risk is limited from here.
And in terms of escalation, any kind of bullish target that you want to paint a blue sky scenario case?
So if Chinese coking coal price, whether they import from Australia or otherwise, is $400 plus coking coal. Similarly, the iron ore price at $130 per ton. If these two things will take, and if I look at the domestic Chinese prices, there is no margin available to them. Maybe some of them losing money also. If that is the scenario, how do we expect the steel prices to come down? This is Chinese situation. Rest of the world is more or less protected. If I look at US is not today, we can say a free market. There are so many restrictions. Similarly, Europe, there are quota system. So those prices are relatively higher than what we are seeing in China. Therefore, if I look at Chinese prices at the current level of raw materials, these are not sustainable as regards to steel prices. Either raw material prices have to come down or steel prices will go up.
Sure. At this point of time, the trend doesn't seems to be supporting the industry for some reason. I hope there is some sort of reversal, like or a correction that we can expect for the March quarter. A word on your overseas subsidiary, because Italy division, we've seen a loss in terms of 6.8 million euros. Plate and pipe mill, I think the operational performance was steady, and Ohio also witnessed some amount of contraction. What's your guidance going forward for all these three subsidiaries?
Yeah, we have posted $55 million EBITDA, both Ohio and plate mill together, relative to 61 million, which we have done in the previous quarter, that is Q2. So there is a slight reduction, as you know, in the case of USA. In certain states, there is inventory tax in USA. That is why, particularly in Texas, where the inventory tax is applicable. So everybody will try to reduce inventory. They reduce their buying in this quarter, Q4 of the calendar year. So that has some impact in the USA. So we expect things will become normal in the Q4, and we will come back as regards to Ohio and plate mill is concerned. Then in the case of Italy, there is a one-off item that is around 5.8 or 6 million euro. So actual loss is only 1 million euro. So it is one-off. If I take it out, I think we'll come back to normal in the Q4 in Italy also.
But Mr. Rao, just to explain this, understand this forward, Ohio, you said that you expect the situation to normalize in Q4, which means that you're expecting demand to pick up because inventory tax would remain the same. And going by that logic, if the demand doesn't pick up, then we might just see more amount of hit coming in operation performance. Is that assessment correct?
Inventory tax is only year end, 31st December, whatever stocks are there, they have to pay.
Fair point.
In the following quarter, it is not applicable. Therefore, whatever destocking that happens, restocking will happen in this quarter. So demand will come back. Over and above that, the infrastructure bill that really stimulates more investments in USA, which is expected. So with that, the demand outlook for steel in the USA is looking brighter.
Okay, last question that I have is on your leverage, which has risen from 1.58 to 1.73. That's with the integration of VPSF. How do you expect this moving forward? Any kind of moderation that can be looking at that the industry we can be looking at for the March ended quarter?
Leverage actually is 1.53. Why I'm saying is, if I see total debt as on 31st December was 66,300 crores, which includes 7,500 crore debt of BPSL, Bhushan Power and Steel. Consolidation happened.
Right.
Whereas EBITDA side, only one quarter EBITDA got added. That is 1,547 crores of EBITDA for the quarter 3, that is October to December, was added to the EBITDA. When you calculate 12 months trailing EBITDA, the EBITDA for 9 months of BPSL is not there. So therefore, if I really annualize the EBITDA for October to December, because the consolidation happened of BPSL only from 1st of October 2021. Yes. That is why the debt to EBITDA appears to be higher at 1.73. If I normalize this EBITDA, taking into account whatever I explained, it is 1.53, which is lower than Q2. Q2 was 1.58.
Okay, I would just want to squeeze in one last question, which came to my mind was the startup cost for Dolvi and how is the expansion going to pan out from this unit going forward?
As far as the Dolvi is concerned, it is stabilized quite well. So there will be a good volume that would come in from our expansion project in Dolvi. So it is more or less completed. So we are now focusing on the 5 million ton expansion at Vijayanagar and also complete small downstream projects which are got extended by a quarter. All that will complete in this quarter or the next quarter. So with that, almost all the projects which we had taken earlier all gets completed, excepting coke oven plant. The coke oven plant, as we have been guiding, that will get completed by end of FY23 and early FY24. Other than that, more or less everything gets completed.
And the startup cost?
Startup cost is a part of.
Yeah.
Startup cost is part of the pre-operative expenditure. It is part of the project cost.
Which happens to be how much for this quarter for Dolvi?
That is not part of the P&L account. So when we prepare the project cost, we also estimate what would be the startup cost. We include as a part of the pre-operative expenditure that gets funded. So it is within that budget. There is not increase.
Fair point. That pretty much sums it all for us. And thank you so much for taking out the time and speaking to BloombergQuint. It was a pleasure having you as always.
Thank you. Thank you very much.